Hey guys, good morning, welcome to the live session of Stocks Never Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Recording in progress.
Hey, welcome to Stocks Never Trading. My name is Ron. My partner is Dave. Thank you guys for joining on this early cold morning. It's our live London session. It's 2:45 a.m. Eastern. We're 15 minutes away from the London market open, and it's Tuesday, January 14th. Welcome, guys. Thank you for joining. I hope everyone is having a great start to their day. Thank you guys for joining me this morning. Welcome, guys. Vinita, good morning. Patrick, good morning. Thank you. Mark, good morning. Thank you for joining. Everyone on YouTube, thank you guys for joining as well. Isaac, thank you. Good morning. Juby, good morning. Content Hunter, welcome. Welcome, guys. Thanks, guys, for joining. And we're going to go through some quick news as what's going on today. If you're going to continue trading after London, during London, if you're going to trade into New York and post New York. So just very quickly, Forex Factory news-wise today, there is going to be some news coming in right now as I'm speaking. The French government budget balance came in. Right over here, the negative $172.5 billion just came through right now at 2:45. 3 a.m. is London market open. Then we got some news at 3:30 a.m. UK. We have MPC member Breeden speaks. 4 a.m. Eastern, we have Italian industrial production, and they're yellow folders, so low impact. No real big significance, volatility we need to worry about. We are more concerned about these red folders. And today there's two back-to-back red folders, very important folders. They are to do with the US, and they are core PPI month over month and our PPI month over month. So this is our producers in the economy. So these are big numbers. This is the first PPI of the year. So expect a little bit of volatility this later this morning at 8:30 a.m. Eastern. That's 10 minutes right after COMEX market opens up at 8:20. And if you're going to continue throughout the day, we do have an FOMC member, Schmidt, speaking at 10 a.m. And we have 2 p.m. later in the afternoon, our U.S. federal budget balance. And another speaker, FOMC speaker, speaking at Power Hour. And then the market will go into the close, okay? So not a lot going on, but if you are trading later in New York, pay attention to these PPI folders, okay? And tomorrow we'll have the opposite. We'll have CPI tomorrow, which is more significant folders. This has to do directly with inflation. Okay. And earnings, we have nothing pre-market before the open. Nothing. We have some after hours. Some names are over here. They're not the biggest names, household names. I wouldn't be too concerned with these names. And then we get into Wednesday morning pre-market, and these are bigger names. These are the big banks. So we have financial earnings this week. We start off 6:55 a.m. Eastern on Wednesday with JP Morgan, Citigroup, BlackRock, Wells Fargo, Goldman Sachs, and Bank of New York Mellon. So Wednesday morning, big day for financials. You can see all of these big bank names. So be very careful if you're trading in the finance sector. If you're trading Dow Jones, there's a little bit of these are inside of the Dow Jones US 30, so just be careful, okay? Just continuing over here, Yahoo Finance for some daily news. Canada pauses electric vehicle rebates worth up to $5,000 for buyers. We'll see what Trump is doing with the tariffs going on over here. Shopify buys pair of domain names for Emerge Commerce. What else we got going on here? Oil hits 5-month high. as U.S. sanctions on Russia menace the supply over here. So if you're trading oil, U.S. oil, we're hitting the 5-month high. Okay, so keep an eye on your charts, see what's going on there. Where's the higher time frame supply, and do your top-down analysis. Bitcoin took a little bit of a dip yesterday, but rebounded near the end of the day. There was some news in the afternoon, so Bitcoin broke 90,000, dropped down to 88, 89, but quickly rebounded. So we'll see today if it can really rebound from that, or if we're just going to get some sideways consolidation, or maybe come back down and test the low 90s. Okay, so that's our news over here. Our Discord signals and trade setups are doing really well. Over here, there was a buy on gold. Okay, so we were targeting 2658.60 area. We allowed the volume to come down to us, and then once it gets down there, we look for our price action, our technicals. You got a bullish candle closing above that with volume, and then there was a couple of retests. If you got in around 2658 or 2660, you place your stop loss directly below the structure. There was a nice move, moving right up to 2668 for approximately 100 pips, and that could be your daily goal done for the day. And if you leave runners, leave some runners, because they might continue moving. I'm going to do some sessions just breaking down our trade ideas, our signals, and getting more in depth, and so you guys understand how to use these things, okay? But doing really well. Not just gold, not just commodities, but there is an indices section over here where we were looking for buys on Dow Jones on the lower time frame, 5 minutes, above 42,250. We get our volume bar that closes above, then it comes back, pulls back, retest area. There was a minor pullback in here, but again, if you have your stop loss, giving it some room to breathe, it recovered, came right back up, and then we're holding above 50% of this big positive candle, and then we continue to drive for approximately 150 pips. Okay, so we're going to teach more about static zones and areas, how to utilize those. Guys, welcome everyone on YouTube. Free blog over here at SST. Visit our website, stocksnipertraining.com, and there is a free blog available for you guys. Mastering trading with the 5 fundamental pillars. What are those? Number 1, risk management. Number 2, technical analysis. 3 is your trading psychology. 4, fundamental analysis, like our trade ideas over here. And make sure you're starting to identify your weaknesses in trading and what you need to improve on, and so you're an all-around trader that can handle all aspects of the market and psychology. Okay, so lots over here on free blogs. Visit our website, click on more, go to blogs, and you can get all these for free. Okay, and also if you want education, we got a ton of education over here. We have a lot of courses, boot camps, lot of webinars over here. We're starting our stock and option webinar program currently right now. We do some lifetime coaching on the weekends, and lots going on here. Okay, and we have a free Telegram group for all of you guys on YouTube. It's pinned at the top of the YouTube. So this is our YouTube channel. These are some good educational blogs that you can continue to read up on price action. I'm going to touch up on a little price action today. I want to see how well you guys are doing with price action to understand everything to go on. So I got a little something planned for us today, and I want to know if you guys like it. We can do a little bit more of it going forward, but we'll break it down. So this was the gold trade ideas that we took. This was MicroStrategy. This was a trade I initiated yesterday. I took at 8:37 a.m. Eastern a pre-market fill. I put a limit order in to get filled. It got filled, 100 shares at $311, and then I ended up selling those shares 25 minutes into the open market when Wall Street opened up at 9.54 and the price was almost 320. So I made about $9 per share, multiply 100 shares, about $900, 880 to be exact, US dollars, and that was a micro strategy scalp for the day. I took another one later on the afternoon and made a nice little profit for the day. So we're gonna start to get more into stock and options with you guys as we get more into the New York sessions. Okay, so let's just go over here, guys. I'm gonna get started with gold for this London session, just to get started. I really want to get into price action with you guys this morning and see how you guys are doing. And I just want to get your feedback. I'm going to start to break things down on the lower time frame, but continue to ask you guys questions. So I need you guys to help me when I'm asking questions. Otherwise, I know that you guys are having a little bit of difficulty as to what's going on, okay? And whatever you learn with price action, you can utilize it in the markets, any sessions, any securities, any time frame, okay? So it's good to learn your price action skills and get better and better and better and start to polish these up, because it will make you a much better trader with an understanding of what's going on with the particular security you're trading. Okay, Content Hunter, thank you. You joined yesterday. Really cool and good signal. Thank you. We appreciate you. Just continue to read up on them, the blogs, also the trade management when the trade ideas come out, how to manage the trade with stop loss, break evens and things like that. But we'll do more and more webinars for you guys to understand these things. Okay, guys. So let's take a look at gold on the higher time frame. Okay, so I'm on the daily right now. So just looking at where we are trading right now with gold, it's around 2670 currently. The last few days, over here Friday of last week, we had a strong bullish candle, and then we had the weekend, and then we started early this week, Monday, with a bearish engulfing candle coming down, and we're opening green right now. There is still quite a ways to come back up to fill this red candle beside us. So if it gets rejected, maybe we will break some support here, and maybe it might push down a little further down into here, unless we get a good daily candle building today, and maybe we can see where we close and see if we can start to break out above 26.95 and then get into 2700 up here. Okay, so just some key identified levels. Okay, what I can see is up here was an all-time high. Okay, so what I like to do is I like to identify it, and then I like to stretch it into the future, that box. Okay, and the reason I make it red is because that's obviously where we had our all-time high, and right up there around just under 2800, sellers entered the market and really pushed gold back down to here. Okay, so that is a supply area, and or resistance, whatever you want to call it, and I move it into the future. Okay, we're trading down here, so we still have a long way to get back up to here to test this zone. We're kind of making lower highs away from it, so we're diverging away from this zone. So I can kind of write on to make it a little bit more clear that we all understand what this zone is. Let's write in here that this is an all-time high supply zone. Okay, so I want to make this really clear for everybody so we know exactly what we're doing here. Okay, so does that help, guys? Over here, so you know that this red box is an all-time high supply zone. It says right over here what it is. Okay, we're nowhere near that, so we don't have to be too concerned about that. So if we have an all-time high supply, a supply zone, where do we have a demand zone, like a bigger demand zone on the daily? What I'm looking at is this area right over here, where it made this move and came down, where it made this move, it pulled back, held the support, the green box, continued that leg to make the all-time high. So if I stretch this zone over into the future, I can see that there was that minor dip right there, but quickly came right back up above that zone again, that box, and we continued with this strong weekly leg, and then it came right back down, back up, kind of like two tops up there, double top, and then dropped right back down. Again, it broke that zone, but didn't really have momentum to drop. It kind of came up quickly again above there and then retested it. So we're still holding this zone. So what I want to do is bring this zone into the future, kind of match it up with my all-time high supply zone above there. And with this zone, I can give it a name as well. I can give it a name as a, what time frame did we get this from? We got it from the daily. So I'm going to stick with the theme and call this a daily demand zone. Okay, you guys follow me? The market is going to open. London is opening up right now. There is going to be some volatility when you're trading. I'm going to continue to go through this until we get down to the time frame where we can really analyze the markets. Okay, so really easy, guys. This shouldn't be complicated for anybody. It's just identifying some critical daily zones. I can continue doing analysis on more daily zones. That's more if you have more time on your own, and you want to go through the charts, then you can continue to analyze your charts. You don't have to remove this every single day when you're trading. You can modify and clean up, but these zones, they're going to be with us until this green zone gets hit or this red zone gets hit. Otherwise, just continue stretching these into the future. But we do have some inside action inside the red and green box. Okay, so what I like to do here is, there was this big move that came up here around 27.18, 27.20 up here, and then they pushed it back down. We came back again up here, and then they pushed it right back down. Okay, so in this area, right over here, I'm going to place a line. It's this yellow line. Okay, I'm just going to make it a little thicker. Okay, so around 27.20, you can see how it was acting as support over here back in mid-October. Then over here it was acting as resistance, and again as resistance. Okay, so you can see it's below the all-time high supply zone. So this is where they're lowering the offers. They're lowering the supply down to here. Okay, so this is, we're going to write on this yellow line, we're going to write what this is. Where did we get this yellow line from? From the daily charts. So this is our daily. I'm going to use the word point of interest, okay? Because if the volume gets back up here, we're going to use it as a point of interest, or this is what we really have to analyze to see if lower time frame volume will close above or below this line. So it's a point of interest, POI, or point of control, POC, whatever you want to use. So it's a daily point of interest, and currently the volume is below this level, so we're going to say that this is a resistance level. Daily point of interest of resistance. Okay, we'll say level. Okay, and it's right there. Daily point of interest resistance level. Okay, since we did a resistance on the daily, do we have maybe a daily point of interest of support? Okay, whenever we do one side, we should always complement it with an opposite side. So how I did an all-time high supply, I complemented it with a daily demand zone. How I just did the daily point of interest of resistance, maybe I should complement it with the opposite of finding a daily point of interest of support. Okay, so again, just analyze your price action. Look where you could see maybe in the past a previous resistance zone that now it's acting as support, or just something that maybe you can see right now that's acting as daily support, worthwhile a point of interest. So what I'm kind of looking at, and when you can look in the past, you can see something and then you can kind of modify it yourself. Okay, so I'm just going to put the line there, and then now I'm looking for data points or touch points to see where I get more touches of the bodies or the wicks. Just looking around here, like right over here, if I go here, I get a body, and a wick. So over there you can see how it was acting as resistance and then the market pushed down. Here when we get green volume coming back up, closing above, it starts to act as support. We move up. Again here, this is when we had a big day. November 6th was the US elections when Donald Trump got voted in. You can see that big, this is where we had big volume in the markets. Drop back down. Now, like, how is this yellow line? Where is it in the price action? Could I pull it down, maybe down to the most recent, like down into here? I could, but again, I just want to see in here. Again, there was resistance, retest, an impulse, push down, impulse. Again, I got green volume closing above. Here again, it's held at that support level. There's a wick getting rejected off of it, a wick. And now I'm at more recent volume starting like last week. So last Thursday, I got a body. So maybe right there I want to keep it. 26.63. Venita, you're down to 26.33. Just a little lower down there, but you have a good level as well down there. Maybe you can have another line down there, but this is the one I'm going to maybe focus on. And you can see that our current daily volume is currently above this line right now. But 26.33 down in here, what you're talking about, you're absolutely correct down here too, because you can see how it was acting as support over here, acting as support. All of this consolidated volume, it was still kind of held pretty much above it. Here it was acting as resistance at this double bottom neckline, and then there it was holding. So that's a good area too. Maybe I'll keep this one as well. We'll keep it on. So 26.33, that's an important daily level. So that's a good one too. Let's write on this one as well. Let's write the same thing. So this is a daily POI, point of interest. But now the volume is above this level, so this is going to be our support level, okay? So this is the one that is a little bit below us, okay, 26.33. But I'm also going to place one at where we are currently around right here, 26. Let me just bring it down, 26.62, 63 level right here, okay? So again, this one, because it's more in today's volume and yesterday's volume where we closed, we gapped up, so we can watch that area. So one more, okay guys, we're going to write in here, same thing, daily, point of interest, support, again, this is a support level, okay, and this one is more active, like it's right near the price action. We're not too far away from it, so we'll see if we can continue to hold. Then what I do is, after I've done a little bit of analysis, I look at what is the overall trend, what is going on in the market. So we are slowly coming up from the demand zone. It made this higher high, higher low, higher high, higher low, higher high. We maybe are building a higher low, but we're still below our daily point of interest resistance. So every time we're starting to make our way up, we still have resistance and we still have all-time high supply above us. So even if we're buying, we still have to understand that the buyers are fighting through all this resistance. If the buyers can manage to close it green above this big yellow line up here, then maybe we're going to eventually turn this resistance point of interest into maybe support going forward, and then might have more volume and more momentum to try and hit that all-time high supply. But we could also push back down, okay? So now what we got to do is kind of look to our most immediate candle, like beside us, maybe yesterday's candle, so we understand what type of volume we're kind of trading against today. So yesterday was a big bearish day in the market for gold. We can look at the opening price right here. It opened around 26.90. It made a high of the day right there, the high wick of 26.93, which was lower than Friday last week. And we're still below this yellow line, the daily point of interest level. So sellers are slowly making lower highs, pushing the volume down. And then we had the big red volume where we engulfed not only Friday, but we engulfed also Thursday's volume. We made a low of the day down to 26.57, and then we closed right where I have that yellow line, that point of interest. And then now, following yesterday's red volume, we closed right here. You can see the market gap. So they gapped it up, and it's an ignited daily candle on the open. We do not have a wick to the downside. So it wasn't like where this daily candle where it opened and pushed down and then came back up. So we have a gap up, and it's immediately bullish on the daily candle. It opened ignited and continued to move up green where we made our high of the day. And it's just right below 50% of yesterday's red volume. Okay, so those are those 50% psychological levels. So what we can do is we can also follow the daily volume of our candle. So we understand that we are still below 50% of yesterday's volume. So if I'm just looking at the red candle and kind of identifying or guessing where is about 50%, I would say it's somewhere around there. Where we opened, where we closed, that's roughly approximately about 50% of yesterday's red volume. But if I want to be 100% accurate and not guess, then what I do is I grab my Fibonacci tool and I place it at the opening price of that red candle. I bring it all the way down to the closing price, and then there's my 0.5 at 2,676 and 20 cents. So see where I placed that yellow line? That's where I was guessing where about 50% was. But if I want to be 100% accurate, I bring it down right there and I match it up right on top of that 0.5. So there I have exactly, I know where's 50% of yesterday's volume, okay? And then once I'm done with that, kind of get rid of my Fibonacci, and then I have the exact measurement, okay? So what we can do is we're going to write on this again, so we understand what this line is. This is 50%, okay? 50% of yesterday's red, okay, you guys understand red is sellers, red volume, okay? So maybe if you guys don't understand where Ron got that that line from, now you know, okay? So that's 50% of yesterday's red volume, okay? Now I can see how we're trading, where we're trading at. So we're kind of consolidating right now below 50% of our red volume of yesterday, and we're kind of above our support line. So this is where we might consolidate. This zone right now, where we are, right in here, is where we're trading. So this is our range so far for the day. And we're below 50% and we're kind of above the support. So we came all the way up here and then got rejected and coming back down. We still have the green body. It might come back up and test that high and see if we can break out further above here. Otherwise, if the exhausted wick starts to get bigger, then we know sellers are pushing down this green volume. And for example, if today we come back down to the opening price and then it flashes red, we know that the opening price where it was ignited is not holding anymore. So then sellers maybe take control of today's volume, and then maybe we flash red, and if we do, we're looking to break this yellow line and then push back down to take out yesterday's low of the day, 26.57, and see if the sellers can continue to push it down where maybe we can bottom out down here at this daily point of interest support level of 26.33. That Vinita, you were correct about that down there. And then we test to see if that daily level will hold. If it cannot hold, then we might push even further down, fill that wick, and then we come into our big green daily demand zone, okay? And that's where maybe the buyers are going to be. But maybe we're going to continue to push up. So what I want to see today is, will the buyers of gold maybe push it above and close it above 50% of yesterday's bearish candle? Maybe then we can make some momentum this week and continue to move up with gold back up to here. Or we might just continue consolidating in this range. And then I want to see if sellers can maybe close it below here to see if we'll push down for this next leg down. Okay, so what I personally do after I've done kind of my analysis is I analyze today's daily candle. Okay, so I kind of did it, but I didn't do it with lines. So what I like to do is I always figure out what the opening price is of whatever security I'm trading, because it's a very, very important time in the market. Any day a daily candle opens, you want to at least acknowledge it. Okay, so the way how I acknowledge it is, again, a yellow line. That's a daily open, but you see how we're so close to this daily point of interest support level. That was the gap in the market there. Okay, so you can see where we closed yesterday. So this, I want you guys to visually see this. Do you see that right there? This neutral box. That's where we closed yesterday. And we didn't open directly where we closed. We didn't open right here. They gapped it up in order to make that ignited candle and continue to push up. So this is the gap in the market. Okay. What I can do is I can bring that support line up so that you guys understand this. So you know this neutral zone right here? You can stretch this kind of into the future, into tomorrow, just so you know that there's a gap there. So normally when gaps open up, they come down naturally to fill that gap and then maybe pick up a wick and go back up. But in this case of this daily candle, we have not had that yet. It just gapped up and continued to drive bullish. So this is our gap in the market right here. Okay, do you guys understand that? That the gold gapped up in order to continue to push up. We have not fulfilled or filled this gap currently. Okay, will the market later today come down, maybe fill this, maybe tomorrow, maybe this week, maybe never. Maybe it just continues to move back up. Okay, but there is a gap that we can see when we're analyzing price action. Okay, so I'm going to write in here, this was the daily gap open. Okay, and now just continuing to follow our daily volume. This yellow line is where we opened, so let's just make sure we write something down so we know if the price ever comes back down to this level that this was our daily opening price. And then when the lower time frame volume gets down to these levels, then we analyze and see what happens. So we opened right there. Normally we might have a low of the day where it pushes down and we have a wick like we did on this candle right here. Then we can clearly identify what the low of the day is. Right now we don't have a wick on our daily open. So no, we do not have basically like a low of the day. So what I can see is the opening price is the low of the day. because it opened right there. There was no push down and it went ignited bullish. So our opening price is also our low of the day. So when I see right here 2,664.65, that is currently our low of the day. Okay, so we can write daily opening price, and then I can also write that it is also the low of the day. I personally, when I'm identifying like the low of the days and the highs of the days, I use a purple line to distinguish between the other yellow lines. Okay, so that's our daily opening price low of the day. So what I'm going to do is I'm going to change this from yellow to purple to identify that this is like a different level. It's important because it's the opening and also the low of the day. Okay, so just changing the color to purple. Now I know that that's the daily opening price and the low of the day. Just following today's daily volume, that's where we opened. So we were green, 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 green. We came up all the way almost to exactly 50% of yesterday's red volume, and that's where they rejected it. So that's our high of the day. Okay, so you can tell by the high wick. So I place a purple line, and that's our high of the day. So now I can see that the purple line is below yesterday's 50% volume. So the sellers are still in control up here, holding it down. Okay, so I just want to write on the purple line that this is our daily. I'm just going to write high of the day. You guys know it's daily. High of the day. Okay, so are we ever going to come back up there to 26.75 and maybe test 50% of the volume and maybe we go up higher? Okay, so far we got rejected and it's still bullish. We still have lots of bullish volume left in the candle. Okay, are we going to make our way back up, or is it going to come back down? We might also get some consolidation, or it might just trade inside here today. Okay, that is our daily range. Now, do I want to sit on this daily candle for the rest of the day and just watch this? No. So what we can do is we can now start to break apart this daily candle and dissect it by going into 4-hour increments and figuring out what's been going on in 4-hour blocks in this daily candle. We can go into 60-minute increments in the 1 hour. We can break it down into the 30 minutes, the 15 minutes. We can break this daily candle down into the 5 minutes, 3 minutes, 1 minute. So I tend to choose between these two. You can either go 4H or 1H. I personally go into 1H if I'm doing more of an intraday analysis. 4H I stay with if I'm looking for a swing trade. If I'm looking to look for a possible trade for multiple days, I tend to go to the next higher time frame. So, but more for just intraday trading like today, then I stick with the 60 minutes because it gives more than enough information where we can see hourly structure and we can identify at what time of day it happens. Okay, so now we're breaking down that daily candle. We have our daily levels, and these are now our hourly candles. I can see how gold is trading the last few hours. I can see where the bigger move was. So I can see this bearish move right here, this candle, was Monday at 5 a.m. It started, the sell-off. We broke support right here. Monday, yesterday, 5 a.m. 6 a.m. we continued, 7 a.m. 8 a.m. is COMEX and some New York news. We kind of had 3 wicks kind of stop down there, come back up, and then 10 a.m. it brought it back down red, closed it below, and you see it kind of really flushed down into there. That was yesterday's low, and then we start to move back up. I can see now exactly what time of day was yesterday's low at. I can see it was at 2 p.m. and then we had a little reversal at 3 p.m. and a market close 4 p.m. and then we go into our Asian session, future session, consolidation, and then we had the big drop at midnight. Here's 1 a.m., 2 a.m., and this is London's volume right now. So what type of pattern or what do we see on the hourly is I can clearly see where our daily resistance is, but up here we've had some hourly resistance. I can see structure. So right away up here, my eyes are looking at this level right there, where this week, last week, kind of just recently, it got rejected right there. Okay, so that's where it really got rejected, and that started that leg coming down. So this red zone is more of, like you can see above us, I can't really see those the big red box. That was that big daily. This is that big daily zone. See where we are trading right now in the hourly? So we are very, very far away from that all-time high supply, and we're very far away from that daily demand zone. Okay, so now what we got to do is start to figure out our hourly structure. Okay, so clearly I can see hourly got rejected right there 1 time, 2 time, 3 time, 4 times. So 4 times resistance might in fact be supply going into the future. So what I do is stretch it into the future, and then if we want, we can add our text to clean up our chart. We'll continue with this theme by just writing what it is so we know. So we're giving ourselves a nice grid so we know what it is. So this is now 1H, because we're now going down to the 1 hour. So 1H, you can say also hourly if you like, whatever, 1H or hourly. Some traders say hourly, some traders say 1H, some traders say 60 minutes, whatever you want to say, but it's representing the hourly time frame. So this is our 1H hourly. It's a red zone, so this is our hourly supply zone. Okay, let's put it inside and to the right. Okay, now can we see anything else on the day, on the hourly? Okay, remember what I said is if we figure out one thing, let's try and look at the opposite. So if I figured out an 1 hour supply zone, maybe I need to figure out where's the 1H support or demand zone. Okay, so I can see maybe right here where it had that big dip. That's it. It kind of, that's where it pivoted and came back up. So maybe right here, this is where I would have a green hourly zone right over here, where we kind of got saved right there yesterday. Okay, and then what I can do is if I want to look to the left, I can kind of do some back testing to see how in the past where it came down, kind of traded in the green zone, back up, traded in the green zone, back up, tried to impulsively break out of that green zone, and then held and then came back up for that leg. Okay, so if I'm bringing it across, I can see kind of yesterday traded right again into that green box and then started that leg going back up. So if I continue with this theme and I bring this into the future, okay, so kind of line it up with my hourly supply zone, I figured out the opposite of this red box. So again, let's write in the, let's identify what this is. Normally you don't need to spend this much time doing this, but if you do a nice thorough one, maybe on the weekend, and then you leave your levels and then you allow your lower time frame volume to just naturally come into these levels, and then you look for trades. You patiently wait and you look for trades. You might start to see that you're making less mistakes and you're achieving more profitability because you're allowing the natural volume to come into these levels and zones naturally without forcing any trades. So this is again 1H, okay, hourly. Let me know, guys, if you have any questions. Okay, I'm going slow and steady today to make sure we understand this. London is a good time to do this. Tokyo is a good time to do this. And then what you kind of want to do is watch the New York volume, how it trades at these levels when we have more and more volume entering the market. Because sometimes Tokyo and London are choppy sessions, and then it starts to move relatively better during New York or post New York. Okay, so this is 1H hourly. our demand zone. Okay. And the reason why I'm calling these hourly, sorry, I needed to move that, hourly demand zone is because we've already done our daily demand zone, and you can see that the volume is nowhere near our daily demand zones. So we kind of got to figure out what's going on the hourly. Okay, so we've now complemented our hourly supply with hourly demand. Now what I look for is same thing, same structure, how we did daily. We looked for daily supply, we looked for daily demand, and then we looked for some daily point of interest with those yellow lines. So now we've done the same exact thing on the hourly. We found hourly supply zone and we found an hourly demand zone. Now the next thing is maybe we look for an hourly point of interest, more of a line, like a white line we can put on the chart. So do we have somewhere maybe that we can see in structure that we have an hourly point of interest? So what I'm looking for is an hourly point of interest, something maybe that might happen today. So you see how we're coming right back up close to that high of the day and 50% of yesterday's red volume. If the buyers can break it through here, break it through this resistance, where is there some hourly resistance in the market that we can maybe identify with a line? Okay, so remember a line, I got a line. Now what I look for is, I look for a good place to put the line. Okay, right over here I can see that where it came up green right up to that white line, pushed it back down, came up to the white line, pushed it back down, came up to the white line, they pushed it back down. We had that big drop Friday at 8 a.m. in the morning, and then we came right back up with NFP. And then you can see how the white line, where it was acting as resistance, 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 and now that there's volume kind of above it, see when it came down red, 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 right back down exactly to that white line, and then now it's acting as support, and then it started to move back up. This candle right here, Sunday night, futures market, 8 p.m. Eastern, opened, it was red, red, red. We broke that, came right back up. Now I can see right here, the red candle yesterday at 5 a.m., we closed below it 50% and then started to drop back down. So maybe if we can continue come up green, 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 we break through this resistance, maybe it's going to target this white line, this hourly resistance. Maybe I can place it maybe a little higher, maybe up here. The reason being is because I can still see where it came down here, went back up, came down here, support, back up, came down here, support, back up. Broke right there impulsively, closed above the white line. See how many times it's touching the white line, and then there it kind of closed right at the white line, and we started with that ignited red candle. So then I have two levels. I can either place it right there, or I can kind of place it maybe right there. So just maybe what I do is I look at my grid. I look at the yellow, this purple line, and then I look at my supply zone, and then I try to just make it even as possible. So I can see like right there, it's about 50% of maybe the red zone to that yellow line. It's right in the middle. If I go right there where those wicks are, it looks like it's a little bit lower. Okay, so again, I just go where I get more touches, and then I look at the whole numbers. I look at the number. Is it like a psychological number? Maybe that also helps. So if I place it at those wicks, I'm 2683. If I keep it maybe right there, I'm at 2684.85. I like that number better, 85. And it kind of, if I look at 50%, what I was just talking about, grab my Fibonacci tool, maybe place it from the red box, okay, and come down to the yellow right there. See where 50% is? Sorry, 50% is right up here. So I'm kind of at that golden 0618. So I'm still in that zone. I'm still in that range. You can place it right there if you like. You can place it right there. Or what you can do is you can give yourself a zone. You can do this. If you're having difficulty choosing to put it at 85 or 83, just make yourself a zone like that. right? And then you give yourself more where it can come inside and you don't have to put an exact line, okay? When in doubt, use a zone, okay? A little bit above, a little bit below, and then should give you a good area, okay? So I'm going to keep it right there, and it's a white line representing hourly, and then we'll write exactly what it is. So we'll write over here, we'll just change the color to white. This is 1H hourly. And it's a point of interest, okay? If the volume can get here, we're interested to see what will happen here. Will it act as resistance? Will this white line turn as support? So it's an area of interest. So it's a 1H hourly point of interest, and right now it's of resistance because the volume is below us and we're trying to get up there, okay? Now that let's find the opposite side. So we found the 1H hourly point of interest. Why don't we look for an hourly point of interest of support on the hourly? So what we can see is right in here. We've had a wick, a wick, a wick, 4 wicks right there, all kind of equal lows right there at 26.67. So that's where I can place a white line right there. You can see we came down at midnight, back up. We came down at 1 a.m., back up. We came down at 2 a.m., back up. We hit it right now during London session. So 4 times here. This line is holding. So that is considered hourly support last 4 hours, and it's kind of above our opening price, that gapped up price. So the depth of market is making a higher low right now. Okay, so I'm just going to place again what this is, 1H hourly point of interest of support. Okay, and then now I can see our hourly candles are just kind of consolidating right now. Okay, we had these mixed indecision candles, 8 p.m. that's the futures market, 9 p.m., 10 p.m. Then 11 p.m. we had a nice big bullish candle. It got rejected, and at midnight we came back down red. Slowly we're trying to make our way back up, but we're kind of consolidating. Okay, now do we see a pattern on the hourly? Okay, before we leave, remember, did we see a pattern on the daily? Now we're on the hourly. Before we go to the lower time frames, do we see anything? Okay, so what my eyes see is we came down here, that made a bottom, we recovered, and we're kind of at we're consolidating here. So will we get a second bottom, come back down, and then we move our way back up like a nice double bottom W, and then you can see what our main neckline is right here. Will the buyers be able to push it above there, close it above? Maybe we retest this, and then we're starting to make our way up to this hourly point of interest, and maybe the hourly supply zone. Okay, that might be in fact one path that we could go. So we've already completed the first bottom. So over here, are we going to get that second bottom? So what I can write in there, so maybe you guys can kind of see what I'm looking for, is in there. Are we going to get a second bottom in there? Okay, so I'm just going to write it green. I'm going to put in there a W. Okay, so W. And we're looking for the second bottom. Okay, does that make sense, guys? This is the first bottom. We do not have a second bottom yet identified in the market. That could be somewhere. It doesn't have to be exactly right in that green box. Might be a little bit above. Might be a false break, like a liquidity grab. Because remember what we have below here. What's below here? What do we have below this green zone? We have what is called liquidity in the market, and we represent it with like a money sign. Okay, so there might be liquidity down in here. Okay, so maybe the market wants to come down, get that liquidity, and then come back up. Okay, it might not be an exact double bottom down there. Okay, so there might be liquidity down there. Okay, what it could also happen is the market could come down, red, 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 and stop right here at our daily gap open. Remember that when we were spending a lot of time on our opening? There's the daily gap. Maybe we'll just come down there, fill the daily gap at our daily point of interest of support, and make a higher low and go up from there. Okay, and then it doesn't make an official double bottom, but it makes what is a higher low. Okay, and then there'll be some liquidity waiting in there. Are they going to come down and get that liquidity? Time will tell. Okay, so that liquidity is kind of just sitting here and here right now. Maybe we hold this hourly point of interest and then we try to continue to make our way up. Okay, so those are just some levels to consider maybe in the future. Okay, so what I'll do is I'll keep that like the W for a second bottom. You can see that this is our resistance up here. So we could in fact also get this happening where it came down back up here. We're kind of consolidating. Maybe if this, now we have some good green volume. Okay, if this green volume gets thinned out, then maybe we're looking today to see if this hourly point of interest breaks and comes down to the daily gap or comes down into here. If we're in fact continuing to build up here, then what we got to watch today is to see if we can break out of this resistance. And not only break out of it, we don't want to just an impulse break. We want to close above this yellow purple line so we can build off of it. Because what is directly right above this yellow purple line, the high of the day, 50% of yesterday's red volume, is there is liquidity up here. Okay, so the market knows that there's liquidity up here. What will happen? Will it come direct impulse break through here, grab that liquidity, and then get rejected, and then come back down, and then we get that selling motion where it comes up here, takes that liquidity, impulsively breaks above the daily high, causes a new daily high, gets into the more of that 50% zone of yesterday's red volume, and then the sellers really push it down and close it back below here. Maybe we retest this zone and then they drop it, and then we're coming back down to the daily gap, or maybe our double bottom, the second bottom down there. Okay, so it could be a fake out above there, but also what we got to watch is if some higher time frame volume closes above there, because if it breaks through, just like here, this leg where it's breaking through, it breaks through and it initializes that liquidity, it gets the liquidity, it gets rejected, but now it's holding this. This now turns into a supporting area. The depth of market quickly accumulates here with a lot of buy side volume and pending orders waiting to get fulfilled because they want to buy that pullback because that volume closed above. It wasn't kind of like a fake out like the option, this first option. So if we come back here and hold, that's where we could start to look for buys, because then we're moving with that bigger volume, those pending orders, to come back up to take out, number one, our hourly resistance and maybe our hourly supply above us. Okay, so do you guys understand that this is one option that could happen? It could break out today and we have a fake out and come back down, and then they bring it back down, or we have that breakout and then it closes green above there, and then we're kind of retesting this and it's holding support, and we continue making our higher high leg. Okay, so those are the possible options. There's various other options, but those are just a few. I'm just trying to illustrate. Okay, so I don't want to just sit on the hourly volume. We could, but we can see it's kind of just trading sideways. So we're forming the neckline. Are we going to get that second bottom, higher low, what I was just talking about? Are we going to get a potential break of the high of the day? Time will tell. Okay, so what I want to do now is go on the 15 minutes. Normally what we do is we go on the 5s, but I want to stick with the 15s this session, because I want to break down each 15-minute candle where we're not rushed like every 5 minutes. So I want to make sure that we analyze each individual 15-minute candles until we're done this session, and maybe you guys can ask some questions. Okay, so these are our 15-minute time frame. It's also a good time frame to intraday trade. You can scalp 15-minute candles. It kind of cleans up a lot of the mess on the 5 minutes. 5 minutes can be chaotic for some traders, so the 15-minute kind of cleans up a little bit more, because 15-minute candle consists of 3 5-minute candles. So just keep in mind the time of day when these 15-minute candles open up. We have one opening up right now as I'm speaking, because it's 3:45 a.m. Eastern. So we get one that opens up at the top of the hour, 4 a.m. We have one that opens up at 4:15. We have one that opens up at 4:30. We have one that opens up at 4:45, and then again top of the hour. So we get 4 15-minute candles per hour. Okay, so now I can see how the 15-minute candles have been trading. So if you were trading around here, around 8 p.m. Eastern when the futures market opened up, Tokyo session, they were very consolidated. Not the greatest to be trading. You can see they come down, they go back up. They go up, they come back down. So they're just trading sideways. We started to get more momentum here at 11:30 p.m. We made our high of the day right there exactly at midnight, and then they pushed it back down. So you can see now, hourly point of interest, see how our 15-minute momentum is holding here. That's our daily opening price down in here. That's that gap. That's where I'm looking maybe for a double bottom. So you can see now maybe I can study on the 15-minute candles. So I can see the leg that came down that made our first bottom, and then now we're kind of just trading right back up to here. What happens, in fact, if we come back down red, red, red? I'd like to see if it will hold right here. That's my first line, hourly point of interest. Maybe the zone right here. If this can't hold, then there's my double bottom. Okay, what we just wrote on the hourly, on the bigger time frames. So then I'd like to see what's happening on the 15-minute candles. Maybe it comes down here, maybe it breaks out a little bit, maybe forms a double bottom within an hourly double bottom. Okay, now it might start to get complicated, but maybe we see something like that. Okay, so not only are we coming into a bigger green box, but this is where maybe we get that second bottom of this move, and then the 15-minute candles they got their own mind. They do their own thing. Maybe we get 15-minute candles that form a double bottom inside a higher time frame double bottom. So that will strengthen this area. It gets stronger and stronger. And then maybe we get that move coming up. Okay. So what I do is I now take it from level to level. So what I like to do, guys, is see where we're trading up here on gold, 26.73. We're nowhere near this white line right now, but I place an alert. Okay, so what I do is, if you got the Trading View Premium, I believe, it's not the basic free one, you're allowed to put some alerts on your chart. So what I do is, I right click it, add an alert, create it. So now I've created an alert at this white line. So if I go to bed after the call, I'll still get an alert. Maybe I wake up and then I watch out, but not necessarily. But if I'm later on today, if it's coming down, I'll get an alert here. Then I don't necessarily have to watch this chart and babysit it. I can walk away from the chart. I can get an alert. If I'm by my trade station, it will give me an alert here. I'll get an email notification. I'll get a notification sent to my phone. But if the volume comes down to this level, I will get alerted. Then I can watch this level. I can send another alert in this box. I can send another alert in here. So I don't have to sit here and babysit this chart all day. I can set levels. I can also I'm going to place an alert at this area up here. If it can break this resistance, I want an alert up there. I want to be notified of this. Okay, so let's just talk about now what's going on here in these 15-minute candles. Okay, so what do we see? We see maybe a second top. Okay, so the 15-minute move right here, it came up. That's what made the high of the day. We pushed back down. You see how it was just kind of consolidating here. and then we came right back up, and then now it's kind of pushing down right now. Okay, so there was kind of one top and second top. Are we going to come push our way back down, or is it going to build a little bit and then we try to come back up? Okay, so what we got to do is I analyze now whether I'm trading 15 minutes, whether I'm trading 5-minute candles, or whether I'm trading 1-minute candles. I take a look at like a significant bar that kind of started this move. So right here, what I can see is kind of an ignited bullish 15-minute bar, and there's half of it, 50% of it. Okay, so I'm going to use this smaller hash line so we can kind of follow this lower time frame. Okay, so again, I just guessed that that's 50% of the volume, also with that pullback candle that we just had. But if you want to eliminate the guesswork, get your Fibonacci tool, plot it where that 15-minute bullish candle opened and where it closed. Okay, once it opens and closes, the data is there. You're not guessing, it's there. Okay, so right there, exactly where I had my red line was 0.5, 50%, 2,671. You can see that that previous candle, how it came down, stopped right there and went back up. Now we're coming down red. We just broke below 50%, so this, we'll see where it closes. It's not closing for another 9 minutes. Okay, so we'll watch this for the entire 9 minutes and see where it closes. It could just come down here and pick up a wick and come right back up. Okay, we're going to see. Will this be a big bearish engulfing candle, engulf this entire green bar, and maybe we're going to start that next leg down? We'll figure it out. Okay, so that is 50% of that green candle. Now, there is some structure on these 15-minute candles. Okay, as well. These things make their own structure. Every single time frame makes their own structure. So just following, okay, we have our high of the day right there. So the next time we came up there, right there, did we touch the high of the day? Did we get higher than the high of the day? No, it's a lower high right here. So you can see that it came up there, but just that little difference from right there, from 2674 to 2675 and some change, that created a lower high. It might not seem like much to you, but in a depth of market, that is a big, significant move. That it was this close to coming back up to touching that high of the day and maybe breaking out for a new high of the day, because that would dramatically change the depth of market. If we had a push to a new high of the day, the depth of market below us would be changing. It would be changing. If you're watching a live depth of market, you'd see that bids are getting pulled and maybe are getting raised higher. Offers are maybe getting pulled and they're getting placed higher. So then it allows the depth of market to open up. So this kind of where it came up and they kind of stopped it right there, it was done for a reason. So it's still to say that sellers are in control. Sellers are saying, we are not allowing the price to attempt the high of the day or break higher. So it's kind of like a goalie in hockey. The goalie is there and stops the shot from getting in the goal. So stop it and push it down. Okay, but when it gets pushed down, we have to also watch what's going on below us, because it is building some type of support as well. Okay, so remember what I said there. This red line was 50% of that green candle. There was that initial impulse break where it just came down right down there to 2670, 71, and now it's coming right back up. So you see now how we're back above 50% of that red line. Now we're trading right at it. Now I look at the time on the candle. We have less than 6 minutes to go. So where will this final candle close? Will it close below here? Will it close above here? Will it close right at it? Will it come all the way back down to the low and push down even further? So what we got to do is kind of watch what this volume is doing. Vanita, it touched the 200 EMA. Yeah, if you want to add indicators now on your chart, you're more than happy to add indicators to kind of complement your price action. Oh, sorry, you meant 9? No, no worries. Okay. But what I want to do is kind of follow the volume of this candle with you guys for the remaining of this call. Okay, so what we have, I want to do this. I know we're going to have maybe a lot of lines here. Okay, so what I want to do is, number one, this was the opening price. Okay, I just want to get you guys to visually understand what's going on. Okay, so that was the opening price of this 15-minute candle. Okay, so it opened green. It made a high right up there, the high wick. So it's purple line. Okay, just everything that we did this entire call. Now I'm just doing it on this 15-minute candle. So we opened at 2006.73 and 27 cents approximately, and buyers initially pushed it up to the high of that candle, 26.73 and 70 cents. I can see that the high of this candle is still lower than our previous 15-minute candle, and we're lower than our high of the day, and we're still lower than 50% of yesterday's red volume. Okay, I'm just reading my legend that I've created here. And we came down red, 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 and we made a low of this candle already. Okay, so that's our low of the candle. And we're going to figure out where the closing price is going to be in 3.5 minutes. Okay, do you guys need me to write on these lines, or do you guys understand that these are on the 15-minute lines? Let me know. I can write if you guys want. Most of you guys understand. We're just doing basic analysis. Nothing crazy here. I just want you guys to get a feel of what's going on. Okay, now see how that, remember when that candle flipped and it came back up here, and then now look at the red volume is continuing to push down. Look at, now it's touching our purple line. So this was the low of this candle, this 50, and look, it just created a new lower low. Okay, so the sellers are pushing it down further. Now look at how much time is left on the candle. 2 minutes and 30 seconds. Are they going to close it majority near the low? And then maybe the next candle will open ignited red with no wick and continue to drop, or it will open green and then we'll see how far it will come up to. We can maybe figure out where's 50% of this red volume of this 15-minute and go so on and so forth. Okay. This is what I do, but I do this more on the 5 minutes and the 1 minutes when I'm scalping the markets. But I'm doing the 15 minutes specifically for this session so we can take our time to talk about what's going on so we don't have to be rushed. Okay, so do you guys understand now? Let me ask questions while this is happening. Okay, easy question. Who is in control of this momentum? Is it the buyers or the sellers? Sellers, obviously. It's a huge red candle. They're pushing near the low of the bar. Okay, so this could be, for example, this could be a daily candle, you know, where it came up and then near the end of the day, they're pushing it down near the close of the day. But this is how it looks on a 15-minute candle. This could be an hourly candle. This could be a 1 minute candle. Now we have 1 minute and 10 seconds to go. Okay, so I always stress the importance of watching the last 30 seconds of any time frame you're trading. Watch the last 30 seconds of how they close the daily candle. Watch the last 30 seconds of how a 4-hour candle closes. Watch the last 30 seconds of how an hourly candle closes. watch the last 30 seconds of a 30-minute candle. Again, watch the last 30 seconds of a 15-minute candle. Watch the last 30 seconds of a 5-minute candle. Watch the last 30 seconds of a 1-minute candle. It will kind of dictate momentum of how this bar closes. Right now, here's the last 30 seconds. Okay, so we made a low. We completely engulfed that previous green bar. Now let's just watch out the closeout. And then I can readjust these lines once it finally closes. But I remember that was the previous low where I had that purple line. It came all the way down there, made the low, and look at it coming right back up. So I know that there's some initial buyers buying it right back up near the close. Here's the close. There was the close, okay? So that purple line is our low, and see how it flashed green? It came up green, but then again the wick, okay? So let me just focus in here. It opened, it just flashed green, but then you see how they kind of rejected it and brought it right back down, but we still haven't touched that low of that candle. Now it's filling back up green to that previous high, and you know this red line that we had was 50% of that green candle. Now you can see how it's kind of acting as resistance right now. We're going to see if this green volume can tap into that and come back up. But right now, the buyers are fighting against this red volume in this candle. It was a pretty big red candle. It didn't officially engulf all of that green bar right there. It came down, but it didn't close below this. And then it came up green right near the end. Remember the last 30 seconds? And then kind of a little bit of that volume carried forward into our next bar. That's why it's kind of green right now. But it's kind of like this small doji candle, still building. So it's kind of indecision currently. Is anyone in a trade right now? Is anyone in a current trade? Flash, you're waiting, being patient? Yeah, all good. All good. Maybe I'll break it down for you. But okay, so you see guys now how volume can kind of consolidate from, this is where we are now. Okay, so sometimes being patient it's okay. You know, don't feel stressed out if you're not in a trade. Don't feel stressed out if you haven't if you're in maybe a little bit of drawdown. Okay, just understand what's going on in the market. So you see how it flashed green, it came up green, green, green. We're still below this, and sellers are now flip the candle, and we're looking to take out that previous 15-minute low and drop it maybe further down into here. But remember this white line down here, that's our hourly support point of interest. That's what we're looking for. We're looking to see if that 15-minute volume can come down here. Maybe we're going to look for buys down here or maybe lower. Okay, maybe the depth of market is building right here where it's going to hold this area. Okay, time will tell how it's building. And then remember what I was talking about was that double top M pattern. So we had this move right there that came up. There's the neckline. All of this sideways action is the neckline. It came back up. There's the double top. There's the M. See now how we're pushing down? Okay, that was one top right there. There's the second top. And then it's now pushing down here. We're going to see how far down it can go, if it can go down in here. Okay, so like if I'm identifying structure on the 15 minutes, you're like this area, that should be kind of like a 15-minute area of supply. Okay, you see how we came through there? That's what made that high of the day, but it was an impulse. Majority of the volume kind of closed right back down here, and then they dropped it. Came right back up again, impulse break, trapped those buyers. Volume closed right at that red box and continued to push down. So this zone I can stretch into the future. We know where now is our big 15-minute supply, and it's right conveniently below the high of the day that they're protecting. So they're not allowing it to break the high of the day. They're doing this for a reason. It's not just by chance. This is how the order book looks, with more supply than there is buyers. There's more offers right now during London session than there is buyers up here at the high of the day. Okay, so you got to understand that. Maybe this will change as we get more into New York. Maybe this area will turn and start to develop with more buyers accumulating in here at the high of the day, because we have some PPI news at 8:30. Okay, but currently during this London session, this is more offers, more sellers than there is buyers. Okay, so you have to understand the session you're trading and the time frame you're trading, and to understand which party is kind of controlling the market right now. Okay, so I don't want to just say that the sellers are completely controlling the market right now, because it's been building. We had this long rally right here. It pulled back, and then you see how it held 1 time, 2 times, 3 times, 4 times, 5 wicks here at this hourly point of and it's still a higher low from down here. So buyers could come in at any time and bring this right back up. Armand, Midman Jess, welcome. Jonathan, US 30 buy break, retesting drawdown. I'm not looking at US 30 right now. I'm going to just stick with gold. I'm going to just stick with this price action this entire session. I really want you guys to learn about price action, and then our next London session we'll do whatever securities again you want. But I really want you guys to understand what is going on here, because when you do understand what's going on here, then you can definitely do this on your own with no issues. Okay, so what type of candle do we have now? With 8.5 minutes to go, okay, so we're not exactly at 50% of this candle. Remember, it's 15-minute candle. Half of it will be 7 minutes and 30 seconds. We're almost there. And you kind of see how we've been trading for the first half of the candle. Okay, it's kind of like a sports game, NFL game. We had the Rams game last night. Destroyed the Vikings. Like I said, I put money straight up on the Rams on the money line. Sam Darnold is garbage. The Vikings are a joke. I don't know how that team is 14-2 or 3 or whatever they were. No way, not with Sam Darnold. That was an easy pick 'em. So there was a first half of that game, and then things opened up again in the second half. So we've had now the first half of this candle. There's 7.5 minutes. This is kind of now second half of the football game right now. Who is going to take control of the second half of this candle? Okay, so remember when we opened, I can see now where we opened. I can see how it came up green. That's a lower high. We're still below this 50% of that red volume, and now they're pushing it down. We took out the previous low, okay, and now we've created a new lower low on our current candle. Okay, so what now the sellers are doing is they're fighting all of this supporting volume right here to the left of us. So how far down can this go? Do we have structure that was built in this consolidation period? We do. If I use this line like right here, I'm going to make it red. Okay, see here how we had the wick came down, but then the volume came right back up and closed right there. The volume came down and created the wick, and then it came right back up near the close. We've got a lot of volume concentrated right around here. There was a close, there was an open, there was a retest, bodies of volume. We have no red volume closing below here. Okay, where the wicks are, the wick, the wick. I don't see any red volume closing below there. Okay, so every time it comes down there, it's getting rejected and going back up. So this is a good structural area to watch. 2668, right here where I have this red line. Will the sellers in fact have enough momentum to bring it all the way back down and retest this red line, or are the buyers going to push it back up? Okay, so I would not be looking for buys right now, okay, until maybe we start to get some confirmation of green volume or this candle flipping and closing above here. Because if you're buying against selling pressure, okay? It's not easy. You're counter trading. It's easier to trade with the momentum of the market. It's easier to kind of sell with the momentum of the market than to buy. But if you believe that structure is being built, which it is, then just, again, the volume is right back in this consolidated area. So the buyers were in control when it opened. The sellers were in control pushing it down. Now we have the second half of the candle, remember? And now the buyers are bringing it right back up. So we'll get the final score of this candle, kind of like sports analogy. We'll get the final analysis when this candle officially closes. So now that I identified my 15-minute red supply area, okay, I know that there's a lot of lines. I'm going to start to get rid of these lines now and just clean up because we do have zone. I didn't identify where my green 15-minute box is. Remember what I was saying? When you find one, find the opposite. So right there, those wicks are identifying my 15-minute area of demand. They come down, back up, come down, back up, come down, back up, come down, back up, come down, back up. We're above our hourly point of interest. So it's still holding green support. So I'm just going to write in this red box right here that this is our 15-minute, 15M supply zone. Okay, and who knows how long this might have to consolidate, but we cannot force trades. Okay, we want to be smart traders here. We want to just be ready. Okay, so that's 15-minute supply below the high of the day, below 50% of yesterday's red volume. Okay, this now is acting as, you can see from the left of the chart how it's still holding. Okay, so what is this? We identified 15-minute supply. This has got to be currently, it's got to be 15-minute demand zone. 15M demand zone. Okay, so when you have your grid, your charts set up, you can go down to lower time frames and watch how everything is trading on the lower time frames, or even trade the lower time frame. So like if I made my chart like this and I want to follow the 5-minute candles, this is what the 5-minute candles look like. So you can see how they came into that supply and then they push back down. Now they're kind of building off the bottom. Are they going to come into this green box down in here? Not yet. Okay, so what we got to do is watch in the next minute and 45 seconds, this 15-minute candle will be closing. So again, if I'm watching the volume, it opened, it initially was green, got rejected, lower high, sellers are still in control, pushed it down, they created a new lower low, they broke the previous candle's low, they came down to there, that was the low of our candle, and now the buyers brought it right back up. It was trading inside here, if you remember, and then the sellers now were coming back down. So the last 30 seconds will dictate who has momentum. Right now it clearly looks like the sellers are back in control. They're pushing it right near, we're not too far away from the low of this candle. Will they close it down below there? Will it, in fact, and then watch how it closes. Watch for gap down candles, ignited red candles that will break to come down, because maybe shorts want to cover inside this demand zone. Like if you're a short seller, for example, you're selling the top of the market, and in order to close your position, you got to close it where there is some liquidity. Maybe there's more liquidity in this green box than there is like right here. So maybe if you're in a short position, you're looking to sell, 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 and then close your position down where the buyers are, because the seller needs to find where the buyers are. The buyers need, if they want to close positions, we got to find where the sellers are. That's how you close a transaction. So here's 10 seconds to go. We came down low. It came back up. Again, we're kind of just trading right back in that consolidated box. So here's the close right now. Close red. Just that little close where it kind of closed below. See the prior wick? Just that little tiny close where it closed below that wick. Okay. Now we're getting volatility in the markets now. Now it's 4:15 a.m. Eastern. We're starting to get volatility. This candle opened, came red, 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 but see that higher low? It's higher than that previous low. So the buyers are still holding the structure here. Higher low, higher low. You got structural bodies here. So it's coming right back up green. But when it comes back up green, is it engulfing anything to the left of us, all this red volume, or are we just coming up and then the buyers are just getting absorbed by selling pressure and then they're getting pushed back down? So you see how that candle came up green, green, green. It looked promising for the first open. That was the first 1 minute, and it came up there. That's a lower high and a lower high, and then they rejected it back down. But you see how it's filling right now. It's filling, okay? So what I would be watching if I'm a 15-minute trader is this green candle going to maybe engulf this red candle? So unfortunately, I got to wait another 13 minutes to figure out where it's going to close, unless I want to trade before the candle closes. Then I'm trading on an impulse because I don't know where this candle will close. It might close green up here. It might close inside here, and it might close red down in here. So if I'm taking a trade right now, there's still 13 minutes to go. So do you understand that if I do that, I have no idea where it will close? Okay, so you got to tell yourself what time frame you're trading and what style you're trading. Are you waiting for confirmations, or are you going to trade on impulse? So if you're going to trade on an impulse, you're speculating. You don't have any confirmations. You're speculating. So what I would recommend to reduce your risk is trade a smaller size if you're speculating. You're going to speculate, trade all day throughout the market's entire day. So if you're speculating, if you're trading on impulse, for example, if you bought that 1 minute open where it flashed green, you're in trouble right now because you bought exactly into supply. You bought into sellers. They absorbed you, and then now they're pushing the market down. So you are, in fact, if you were an early buyer, you are currently in drawdown. It might not be a lot of drawdown, but it's still in drawdown, okay? You got to understand that we had no confirmation. Just because the candle flashed green doesn't mean that we have to jump in and buy, okay? Why not wait for it to come into the demand zone, which we spent the majority of this call identifying, and maybe buy in here, okay? Because if we bought this wick, this wick, this wick, this wick, or this wick, we had that big move to the upside, okay? Inside here, there's no real guarantee of anything in here. Maybe we see what happens when it comes down into the green box. Okay, does that make sense, guys? And I know it's difficult to wait for candles to close, but if you're a 15-minute trader and you're choosing to trade on 15-minute candles, try and get in the habit to wait for the 15-minute candle to close. If you're not waiting for the 15-minute candle to close, then make sure you understand that you're making a speculated trade. And that's not a trade you want to go in with your full lot size. That's definitely not a trade where you want to over leverage. You're speculating, okay? So then take a micro size, take a small size, take a feeler size. If you bought on that initial open, that green volume, and you had a smaller size, when it brought you down into that drawdown, you probably wouldn't be panicking as if you did if you were trading with a larger size. Now it's coming right back up, okay? So again, we can follow the volume. Now we have 10 minutes to go. There's still a lot of time, but we can see that the buyers are building it, okay? It's got to build. We might be reversing and coming right back up, but we still have a lower high off of the 15-minute supply zone. So the sellers are still there. They're still pushing it down. Will this green candle close above 50% of that red candle? Will we close up here to engulf this red candle? Right now, it's kind of like an indecision candle. It opened green, came up. Sellers broke the low, came all the way down here. And buyers are bringing it right back up. So got to continue to watch this candle. And we're trading in between the zone. Is this the best area to be trading as well? That's another question. Maybe I want to be patient and understand that gold is not just going to trade here all day. Maybe for London for the next hour or two, it might. But what I could do is maybe watch who's accumulating more in here and then watch what type of move we get here for the rest of the day. Are we going to get that where it breaks out? Holding, and then if it closes above here, what I do is I flip this red zone green, and this might turn into 15-minute area of support. The depth of market might be building here. Then we get that nice build of buyers here, and then we have the potential to break the high of the day and start driving into yesterday's red volume. Okay, that's one possibility. Oh, I lost my my description here when I did that. Believe me, guys, if you can learn this and follow this, you're going to become more proficient with your trading. You're going to become more disciplined with your trading is the word I want to say. You will eliminate your mistakes. So it's just it's a game of patience, okay? That's what it is. I'm very patient in order to get paid on a daily basis. I will allow the volume to come to me. If I'm making an impulse decision or I'm speculating, I go small. And then if it goes against me, it's not really negatively affecting me financially for the day. I don't really count a speculated trade, a tiny trade, as going to my profit loss for the day. For example, if I'm using a 0.1, 10 cents per pip speculating in here, if I go into 20 pips of drawdown, I'm down $2.50. That's how much it costs a coffee a day. But if I was doing a standard lot and I'm down 25 pips, I'm down $250. Okay, so there's a different mindset. There's a different that could affect my next trade. That could take away from my my daily percentage, and then I could be done for the day, and then it's a losing day. So you got to understand what you're doing too. So we're eventually maybe going to have a move to come up and test again this 50-minute supply. Maybe we have a break, a close, and then we have a new high of the day. Maybe it comes back up. Buyers bring it right back up to here. Maybe it's a kind of a fake out, and then it comes back down and it closes, and then we sell the supply. Okay, if it closes above and retests this, we're buying this move. If it comes up here and kind of takes out the liquidity and gets rejected, or comes up to the red box and gets rejected, we could look to sell the supply zone, sell our stop losses above here, and then we're making our way back down into here. Okay, or what we're doing is we're waiting for the opposite side. We're waiting for this volume to come into the green box, maybe do something like this, and we're looking to buy out of the green box, how we could have done any one of these candles. But there could also be selling pressure that breaks through and creates those lows and closes below that green box, and we got to flip that green box to red because the buyers are coming back up, and then it's a bigger red. We flip the word 15-minute demand zone, we change it to a supply zone, we make the box red. The buyers are buying right into sellers, and as sellers drop it down to the daily opening price, that's in fact our low of the day. That's that gap that they gapped up the market. There was the gap right there, and maybe it's going to be a selling day on gold. Okay, so and what I can do is wait for that volume to come to this red zone or this green zone to dictate the next move. But if you positioned yourself at 345 up here, started to sell up here, you are in fact doing really well. Okay, but now this candle is closing in 5 more minutes. Okay, and then it's also 4:30 a.m. Eastern, so we're going to get a new 30-minute candle opening in the market. So sometimes when I'm on the 5 minutes, I flash to the 30 minutes or the new hourly or the 15-minute. I go to the higher time frame to see what's happening. So I can do the same thing here too. I can go from the 15-minute candles, now kind of clean up. These are our 30-minute candles. So I can see where we came up. They faked out the high of the day up there, came down. You see the 30-minute candle right there at 330? It closed roughly 50% of that big green bar. And this 30-minute candle that's going to close in 4.5 minutes, this one might complete the engulfment. See where we are? We're almost engulfed that big 3 a.m. That's London's green volume. So this one is in fact called a dark cloud cover if it completes this pattern. So this one needed 2 consecutive candles to engulf the big green one. So it takes 2. This wasn't engulfed by one red candle engulfing it. This takes 2. Okay, so it's called a dark cloud cover. It needs 2 candles to close below that. Now look, it's coming all the way down into our green demand box. So let's go back to the 15. Let's watch this. Okay, so we're coming back down into every time we came in here. 12:45, 1 a.m., 1:30, 2:30, and 3 a.m. That was London market open. Came down. We've gone right back up. Okay, so now we're officially coming right back down into this demand zone with 3.5 minutes to go and a new 30-minute candle to open in the market. So now let's watch. Let's see the reaction that happens in this green box. And then also what I do is when this red volume closes, I identify exactly where's 50% of that volume, because if we do get a reversal coming out of here, I maybe want to buy above 50% so that I get more of confirmation that the buyers are strong and they can close it kind of above 50% of that red volume. Okay, so this red line which we had, that's kind of representing right now about 50% of that volume. Again, I'm just guessing. I can bring my Fibonacci tool and measure from the open to wherever this closes to give me the exact 50%, but we have 2.5 minutes. So this will fluctuate, but I'm just bringing down this red line where I had it up here to currently where's 50, but I don't know when until the official body closes. Okay, so I'm just going to leave that red line up there until this body closes. So as soon as we just came into that green zone, look at the tap, and we got rejected. So the buyers were pending right there. How will this candle close? Will this candle completely flip and turn back up green? Then maybe the momentum will be switching and go up green, or the seller's going to come back down. Okay, see how they're coming right back down? Where will it close? The game is who will close it. Remember, we want to get down to the last 30 seconds to figure out the momentum. Welcome, guys. If you're joining on YouTube, thank you, guys. We appreciate you guys. This is Live London, live price action kind of webinar. We turned it into a webinar, but it is in the live markets on gold. Our next London call, we're actually going to go back to the 5 minutes, but just want to give a brief overview of what we're doing. We did a really thorough top-down analysis today. We spent some time on the daily. We spent some time on the hourly. We spent some time on the 15 minutes. We marked all of our zones. We wrote our points of interest. We did a lot of homework today, exactly explaining what we're looking at. Okay. Once you get in the habit of doing this, you're not going to have to write these. Purple line is the high of the day. You're not going to have to write the yellow line. I don't write those when I'm trading by myself because I know what the colors represent. For you, you pick what colors that you will be comfortable when you're trading. Doesn't have to be the exact colors I use, but you can be whatever colors you want. But just understand you're kind of color coding the different time frames and specific areas, and you just naturally allow the volume to come down to you. Okay, now let's pay attention. The last 30 seconds. So sellers are still pushing it down. Are they going to push it down? Sorry guys, I'm going to zoom in because I really want you guys to see this. Okay, so the sellers are pushing down. That was our previous low right there. Okay, it came right into that green zone, and then the buyers brought it right back up. Now let's see who will have the majority going into the close. So right now I can see that the buyers are pushing it up. They're pushing it up. They're trying. There was the close. Okay, so we still have this big red body. What is 50% of that red body? Right there. That's roughly 50% right there where I just placed the red line. If I want to be 100% exact, where's that red line? Grab your Fibonacci tool, opening price of that candle, closing price. Now that it closed, look at my red line is exactly right on that 0.5. So I've accurately identified 50%. So yes, we do have a green candle, but we don't want it just to come up like how it did here, where it came up green and then they pushed it back down. Here we opened green and they pushed it back down. Here we've opened green as well, but we're opening green as we're getting more and more into the demand zone. Okay, but I don't want to just buy again and then buy and then they slam it back down. Okay, you see how now it's testing 50% of the volume? Will the buyers in fact break it above here? Will we officially close? I know it's early. We still have 14 minutes to go. Will they close it above 50%? Will we have a green completely engulfing bar close above this body? And then maybe we can work off of that volume on the next candle and then maybe look for a buy entry. Okay, so I don't want to just buy just because it flashed green, because if we did that on this candle, we were in drawdown. If we did it on this candle, we were in drawdown. Again, if we just buy because the candle flashed green, we might be putting ourselves into drawdown. Okay, so again, if you're choosing the 15-minute time frames, you have to teach yourself to maybe let the candle close. Now we might be building a second bottom over here. It might be in the building phase where we came down. This entire structure right here is one bottom. We came back up. There's our neckline. We came 15 minute, 15 minute, 15 minute, came back down. Those three red legs, we came back down. Are we officially going to come back into this green box? Maybe create a double bottom, and then we're starting to maybe move our way back up. Maybe it doesn't need to come into the green box. We're going to see if the buyers can come in right now, but we have to watch this candle. What you can also do, guys, I'm not going to do it on today's call, but what you can also do is you can go to the 5 minutes. And then right here, this 5-minute candle, this green candle is going to close in 2.5 minutes. If you get an engulfing 5-minute candle, maybe you can work off of this candle and look for entries, okay, if you're a 5-minute trader. But we're going to stick with the 15-minute theme. Patrick, please share the chart when you're ready. Yes, absolutely. Let me do it right now so we don't forget. Thanks for reminding me. Just let me know if you got it, Patrick. In Zoom, guys, you should see a trading view link. It's of all the work we did in today's session. And you can follow this throughout the day. And that's what I would, in fact, hope that you guys do. Follow this and see how the gold volume reacts at these levels. Okay, so guys, remember how this candle, look at what happened. Now we got a shooting star candle. Again, they trapped the buyers. You know when it just flashed green, we identified where was 50%, so it just kind of just made a hair above that 50%, and look at, they slammed it back down, and now we're coming down as a shooting star, potentially going to take out the previous 15-minute low. So we are on a downtrend right now. We have a lower high, we got a lower low. We have a lower high, we have a lower low. We have a lower high, we had a lower low. We in fact now have a lower high, and maybe we have a new lower low. So sellers are in control of this leg coming down. But now we have to be careful, because now we're coming into that demand zone. We're coming into that hourly point of interest of support. This is where maybe you want to use an indicator to help complement. So what I do is, if you look at your RSI, okay, if you guys use this is the RSI indicator. We just broke below 50. It's sitting at 45, 46 right now. So there's still a long way it can continue to go down before it gets, we're not even oversold yet, okay? We're nowhere near 30 or below. Right now we're kind of just at that, below that psychological 50 level. So there's still, sellers can come in and push this down, but we're now in that demand zone. If you want to add EMAs, 9 EMA is this green line. We are currently below the 9 EMA on the 15-minute time frame. If I look where my 200 EMA is, my 200 EMA is all the way just below the 15-minute supply zone. So it's bearish on the 200 EMA. We're below the supply zone. It's still below the 9 EMA, considered bearish, but now we're approaching the supporting level. So let's see what type of reaction we get by the buyers here, if there is a reaction, or the sellers. Are they going to break it and cut right through this zone and maybe close it below here? And then in fact, we might be even selling more back down to the low of the day and then filling in that daily gap. And then that might be a good area to look for a buy down in here. Okay, so maybe I'm not, if it continues to come down where I was maybe potentially looking for a buy here. If I can get a better buy at a discount down in here, if the market allows it to come down here, I'm more comfortable buying down in here. Okay, because then you're buying more on a discount. That's what we want to do as traders. We want to buy on discount and we want to sell on premium. You never want to buy premium and you never want to sell discount. Danny, do we call out buys and sells in stream? Yeah, absolutely. I trade live with you guys. 100%. We do. I like more of the New York volume, but London, yeah, if we see a trade, absolutely. I'm taking it with you guys. Just, you guys manage your own risk, please. I'll tell you guys where I buy, where I sell. I'll tell you guys exactly where I put my stop loss. If you're learning, use a demo account. If you're using your real money, just, you got to know your own risk. I don't know your risk, guys. I got to manage my own account, okay? But absolutely, I do trade live with you guys. I'm very transparent. Show you exactly where I'm buying. I make it verbal, guys. If I put a pending order in the market, I let you guys know ahead of time. No worries, guys. I'm here with you guys. I'm trading with you guys. I'm not getting up at 2:30 in the morning not to trade. I'm here to trade, but and also to educate as well. Okay, so look at the sellers, guys. Now we've got 7.5 minutes to go. So we've completed the first half of this 15-minute candle. This is kind of like the second half. Now who will control this? So look at the selling pressure. So it pushed back. They created a new low. Okay, so they took out that previous low. They made a new low. We're trading right in the 50%, like that belly of this green demand zone. Will they flush it out? This red candle, will it fill these prior wicks? Will it close back below here and create a new low with new fresh red volume? Or will this thing come back up? Look at, see how I said, guys, do not just go in on impulse candles, because 4 times you would have been screwed here. If you kind of bought that flash green right when it opened, they brought you down. If you bought that flash green, you went down. If you bought that flash green on the open, you're in drawdown. Again, this candle, it looked exciting. It looked good. This is what the market does. It entices us to buy because they want our money. They want our liquidity. That's what they're looking for. So if they can tease you with a green candle and we all get excited and we buy it, then we're back in drawdown. So think of how many times how your whole day could have been ruined here if you bought here and then you got pissed off and then you added another buy here and then you got really pissed off because you're in drawdown and then you kind of over leveraged and then you added another buy and now you're in like 3 times the buys, over leveraged, and you can possibly give away like yesterday's profit. You can blow up a phase. Just you're losing your mind. This is how the markets work. It plays mind games with you. Unless you can mentally prepare yourself ahead of time, then you don't need to play these mind games with the markets. Okay. See how I got an alert? I just got an alert because remember when at the start of the call, there's my clock. I just placed it at that hourly point of interest of support. So I just got an alert. I'm here at my trading station, so I heard it. If I was away from here, I would have got an alert on my phone, an email, notification, and then I could have came, whoa, gold dropped all the way down here. Now I got to watch. Are the buyers going to come in, bring it back up? So look at that candle is heavy red pressure. So we made a new lower low. Will it in fact close below this green zone? That's going to be interesting. And we have 5 more minutes to go. If it closes red below here, then I'm going to flip this green zone red because this might be going ongoing offering supply in the future. So definitely not looking for a buy. I'm not buying against this heavy red candle. If you guys were selling, congratulations to you sellers. If you guys were buying, you can see how the market traps you by enticing you as soon as the candle opens, and then see what they do. They bring it down. So I'm happy that I can show you this live because it's different when I'm just talking about this. Now you guys can actually see what Dave and I are talking about on a daily basis here. Just sometimes, when in doubt, wait it out. If you're thinking of buying, just wait for confirmation. The only way I was looking for buys is to see if green volume would actually in fact close above 50% of a candle or engulf the red candle. Then maybe something like that I would be looking for a buy. But I don't want to just buy because I see a green candle. And you see how different the 15-minute candles are compared to the 5 minutes? So 5 minutes are slowly breaking down, and then the 5-minute candles are trickier. They're not as easy as a 15-minute candle. Okay, so look at the flush. Okay, now your RSI, if you guys are RSI traders, you can see now it's starting to get oversold. Now it's starting to approach that 30 level, and then look at where we're coming down to. The purple line, I don't know if you can see it right there. That was our gap. Let me just get rid of the gap in the market. See the purple line right there? That's our daily opening price of gold, and it's our low of the day. So right now, it's almost came all the way down to our low of the day, and this is where they gapped open the market. We've got less than 3 minutes to go. So if this closes red below here, I'm going to flip this zone, make it red going forward. Look for buys above that zone. If it comes back up, retraces back, I might be selling this zone back down. Thank you, mine Gussie. Thank you for guys. If you can hit the like buttons, if you guys are learning anything, let me know by hitting the likes. Appreciate it. I like doing price action analysis. I love breaking down candles. So that double top pattern, in fact, played out where you had that one top. This is our neckline. That was that second top. So here's our M. This is the red volume candle now breaking below all this structure. But where and how will it close? Okay, so this is an impulse break right now that we're having. It's going to close in less than 2 minutes. And then I also look at the time. So when this candle closes, it's going to be 4:45 a.m. Eastern. And then one more 15-minute candle. It's going to be a new hourly candle at 5 a.m. So is the market specifically coming down for a new hourly candle near the daily low of the day? down in here where maybe buyers, hourly buyers, will bring it right back up? Or is it going to continue selling? I don't want to make it always look like it's going to be a buy available just because it's coming down to a certain, we have to continue to watch our technicals. Because this could just continue, maybe a pullback, and then sellers continue push this down. So that's why we want to buy when we get some good confirmation. We don't want to just hit a buy just because it's coming down to a critical daily level. Okay, we still need confirmations. Wow, Captain Boom, your daily goals met. You sold out of the white box on the 5 minutes. Congrats, man. Huge. That's huge. That's it. Boom. Be done for the day, or just walk away, or just trade with a smaller percentage if you're going to continue to trade today, but lock in your profits for the day. That's it. Daily goal done. Let's do this again tomorrow. Rinse and repeat and start getting the habit of this. Guys, when you hit your daily goal, I cannot stress enough to get out of the markets, because then you're going to be forced to take more trades. You're going to see setups, and then you might give back, and then you're going to go through that cycle again of giving back, revenge trading. Oh, I got to make back what I just lost. Then you go in negative. It's going to affect you into tomorrow's trading. Believe me, I went through that for years, and then I figured out the recipe to do this is just hit your daily goal and walk away. I'm telling you the honest to God truth. That's the way how to do this. Hit your daily goal and close up the charts. That's it. And then once you get in the habit of that, you're going to be like, wow, trading is, now I understand this. Okay, so look at what I just did. This green box, it closed red below there. So what I did was I made it red. I have to, again, we're going to get in the theme of writing and being clean here. So I'm going to write inside that red box what it is. Okay. So this now, in fact, is representing a 15-minute supply. Where it was demand, now it might be a new lower high supply zone. Okay. Okay, so you see how now, again, we opened. Let's just follow that red candle, that 15-minute candle, came down. Look at how close we were to hitting the opening price, the daily low, the purple line. And it came right back up, and this candle opened green, very relative low. Okay, it just opened green, just a small tiny pullback. It's still higher low than the previous low. And now we're coming up green, green, green. So we're coming right back into our zone. I never changed the size of the zone. I didn't do anything. I just changed the color. Okay, so if I'm looking for buys now, what I'm looking for is, I'm looking for green volume to maybe come back up and close 50% of this red candle, but more importantly, close above here so that I can continue to make that box green. And then if it pulls back, maybe I buy the pullback, and then it's coming out stronger. And then I feel comfortable buying that. But I don't want to get sucked in again. Just buying a green candle, and then it trades right into the supply, and then they push it right back down. But this is maybe a candle building going into 5 a.m., our next hourly candle. So this might be creating the wick on an hourly candle. So if I go to the 1H, see the wick? This 15-minute candle, in fact, could be creating the wick of our previous hourly candle that's going to close in 12 minutes. And remember, look here, 1H hourly point of interest, this white line. So impulsively, this hourly candle broke near the low of the day, and now it's coming back up. Will it close with volume above the white line, hourly support? And maybe that might continue to build support, and then we might buy off of that the next hour. So see how these lines continue to play out. This is now the hourly volume. Where will they close it? Is it going to close right at our hourly point of interest? Is it going to close below our hourly point of interest? Will it close above our hourly point of interest? Okay, so let's stick with the 15-minute theme. And remember, this is 15 minutes. So if we were on the 5 minutes, see how things are a little bit different on the 5 minutes. Okay, so if you don't feel comfortable analyzing all of this or trading this, go to the 15 minutes and you can see how it kind of cleans up the price action for you. Look at that again, guys, what I was just telling you about. Green, 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 right into that red box, and sellers are pushing it down. Okay, so if we just bought that candle, we're buying on speculation. We have no confirmation. We're just saying to ourselves, it's near the low of the day. I see a green candle, I'm going to buy. To me, that's not trading. That's not trading. That's just hoping and praying for the best that can happen. Okay? We need to trade on confirmations. Number one, is this green volume? We haven't had one green candle close in the last since this sell-off. So can we see at least one green candle close green? Number one. That's all I'm asking for is, can I just see one green candle? I don't care the size of the candle. Can I just see a green candle close? I haven't seen one. Can the green candle at least close above 50% of the previous red candle? I haven't seen one. Can we see at least one green engulfing candle close a previous red bar? I haven't seen one. So do you see how everything, I'm talking myself out of like taking buys because I have no confirmation. So if I do take a buy, I'm speculating. I'm just kind of hoping for the best and I'm guessing. I don't want to trade like that. I want to trade with more confirmations. And when I take a trade, I'm using proper risk management as well. Okay? Just because you wait for a candle to close, that doesn't mean that you're going to be profitable every single day. Okay? I just want to make that clear. A lot of people think, okay, Ron, I'm going to be patient now. I'm going to wait for candles to close. I'm going to make daily goals every single day. No, that I would tell you the truth if that's what would happen. You still got to trade with proper risk management. Just because a candle closes doesn't mean you can over leverage your account and do silly things. You still got to be smart. Now it's coming up nice and green, fully engulfed. We're back up. Okay, so remember the momentum of this candle. The sellers exhausted it, brought it back down, but the buyers are still now filling it up. So we now currently are above 50% of the red candle. We may in fact close above this zone. We might in fact engulf that red bar, and then we're going into the new hour. So maybe this is the liquidity grab. Remember what we had here before? The dollar sign. Remember what I had right there? Okay, maybe they came down there, they broke that structural level right there. We had that structure all call. They broke it down. Maybe they grabbed the money, they grabbed the liquidity, and now they're coming right back up. They got the money. We're going into a new hourly candle in the next 8 minutes. This might now start the transition of buyers coming in the market. Okay? Do you guys understand what I mean by that? Now you can visually see how they broke the structure and grab that money, that liquidity there. Maybe short sellers covered their position. Maybe these sellers covered their short position because they found the money, they found the liquidity, and now it's coming back up. But wow, look at now, okay? So we have 8 minutes to go. 7.5 minutes is our halfway point. That's halftime on this candle. It's 15 minutes. So we just came up right near that high. Again, it's a lower high. Look at the sellers pushing it right back down. So this is now halftime. Now we have a second half of this candle. It's exactly like a football game. So you see now the sellers are pushing it all the way right back down. Now will the buyers answer and come all the way back up? Or is this going to, in fact, the sellers are going to overwhelm these buyers, take them out, and then we're continuing with a shooting star candle, taking out the low and maybe testing the low of the day and the opening price of today's gold, and maybe we might continue selling. Okay? So you see how it came up green, 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 and it looked exciting, and if you hit the buys, again, they push you down and draw down. And if you look at the range of the candle, these are not small candles. If you look at the range of that, just this previous candle, it's 32 pip candle, 32 pips. Okay, so the volume is really starting to open up now as we're getting more into the main hours leading into pre-New York at 6 a.m. Okay, so how did you guys like today's session? I did something a little different today. I really wanted to explain price action to you guys. If you see in the title, it says Live London, Live Price Action Analysis. Do you guys like this? How we stayed on one chart, we followed gold. We could have done any chart. I don't care what the security is, but we did a thorough analysis from the highest time frame. We did a daily, brought it down to the hourly, brought it down to the 15 minutes, and we just kind of talked about what was going on. We kind of talked about the mistakes we could have made. We talked about maybe the trades that we could have made if we were looking to sell. Some of you guys already did sell, but just being patient, disciplined. If you missed out on a trade, it's not the end of the world. Maybe come back later. Be very, very disciplined, guys. Be disciplined. Treat your trading like a business. Don't treat this like it's a casino. If you treat it like a casino and you're gambling, I guarantee you're going to lose a lot of your money. If you've ever gone to Vegas, you're not a lot of the times are you coming out making money. You're always, the house always wins. Okay, so it's kind of like that in the markets. You know, the brokers always win, the market makers always win. If you treat this game like a casino, be very disciplined. Captain Boom, you hit your goal, you're done for the day. Business. You went to work, you got paid, now it's time to go home and see your family. That's the way I look at the markets. This is a business. I come in, I come to work, get my daily goal, and I go home. I'm out. I'm not here to play games. I'm not here to gamble. I'm not here for a fun time. I'm here to get paid and get out. I want you guys to learn that mentality as well. Awesome, Flash. Good. I'm happy it helped. Yes, it can definitely. You're struggling with your entries. It's good session teaching patience and how you can be very disciplined. Absolutely. Allow the volume to come to you naturally. Okay. The green volume naturally never came to us. It did if we were trading on impulse. It did if we were just getting in without confirmation, 100%. But if you see that in the last entire hour and more, if we were buying, we would have been in drawdown. Okay, so we never had any confirmation. Even this big green candle that came up, if we bought that, we're technically in drawdown right now. So we got to wait for closures. We got to wait for overwhelming volume to engulf a previous bar. Bitcoin, what are we at? There was news in the around 2 p.m. yesterday about Bitcoin. That's why it jumped. Oh yeah, it's going off 97,000. I'll be trading MicroStrategy going into New York. Okay, so now what we got to do is there's 3 more minutes left on this hourly candle, and unfortunately I'm going to be done at when this candle closes, because I'm going to go to sleep. And I got to get up at 8 a.m. to get the kids ready for school and to get ready for some Wall Street pre-market trading and Wall Street trading. And then Wednesday, guys, we have a webinar. Wednesday Tokyo session, 7 p.m. And then we'll be back Thursday, again, live London. If you guys like this style, what we did today, we can continue this. We can do it with a different security, whatever you guys like. Or we can just go back to doing what we normally do and go straight to the 5 minutes. Do faster analysis. I'm here for you guys, whatever you guys want to do. I do pre-market trading as well in the stock markets over here, guys. On the free Telegram, I kind of posted it yesterday. Right here. So this was MicroStrategy. So I put a limit in pre-market. You can only trade with limit orders. So I put a limit in to get filled at 311 below a discount what it was trading at. It was trading at, see, 314, 315 were the bids at that time. I put an order in at support, like how we did today at 311. It got filled 100 shares. You can see at 8:37 a.m. So Wall Street, you guys know, doesn't open till 9:30. So that's pre-market. And then at 9:54, 25 minutes into Wall Street, it moved up to almost $320 MicroStrategy. So then I ended up, that's it. That was my flip for the day. I sold it. I was done trading that day by 25 minutes into the Wall Street, and that was almost $9 per share times 100, almost $900 US, and I was out, done, didn't care what it did. The rest of the day, I got my daily goal and move on. So you can do it with gold, you can do it with GBP USD, you can do it with NASDAQ, you can do it with Dow Jones, you can do this with MicroStrategy, you can do this with Apple, Tesla, whatever you guys want. We're going to start to now get more into stock and options education and live trading. I'll save these London sessions. We'll do price action, we'll do Forex and futures. And then when we get into the 2 weeks of New York, we're going to kind of shift focus on stock market. We're going to look at actual index trading, specific securities. This is where we'll be analyzing Tesla, Apple, Microsoft, and MicroStrategy, Palantir, like all of these companies, household names, Costco, Walmart, McDonald's, all of these things. We'll be following them. We'll be following the earnings. We'll be looking at everything. Okay, so remember, last 30 seconds of every candle, very important. We're down to 15 seconds. So you see now where the battle is. So after the call, unfortunately, I got to go. Watch and see if green volume will close above here. If it does, change this red zone to green. Again, see if it builds off of it, then maybe look for buys. But if it continues to stay red, like we cannot buy that. If we're still red below here, they might push it back down. And then maybe look for buys, see if they take out the low of the day or anywhere down here. Then maybe they grab more liquidity. And then remember our second bottom, what we did here today. Remember that bigger zone right there? We have our big daily demand zone, and there was the W pattern, our second bottom. If the 15-minute volume comes in there, that might be the great opportunity of the day to maybe look for the buys down in here. Okay, slowly, if you're looking for buys, maybe let the market come to you naturally. See how it's still red? It came up there green, green, green. Look at where it closed, right at the red box, and then they're pushing it back down red. Okay, so we might now get barcoding. Red, green, red. See if it continues to build. If it closes above here, flip this and watch. If it continues to push down red, watch to take out this low of the day down here. Okay. Movies, English. Thank you. You smashed the like button. Thank you, guys. I appreciate that. Guys, that's it for me. I'm going to go to sleep. I only get about 4 hours sleep a day. Kind of stayed up all night for this session. I couldn't sleep. So I got to get those 3 hours in, or else I'm going to be a zombie for the rest of the day. I appreciate you guys. I appreciate you allowing me to kind of teach price action. I'm really passionate about price action. I love this stuff. I know it can potentially change your life financially if you really take this serious. If you're really disciplined and you understand risk management, and you understand if you make a daily goal, you're done for the day. Also, opposite side, if you hit your daily stop loss, you're done for the day. That's it. Stop revenge trading. Stop trying to make up all your losses in one day. Walk away from the markets, breathe, meditate, control your emotions, and then come back at a better state. Believe me, I have losing days too. Dave has losing days. All of us at SST have losing days, and you guys have losing days. But what separates a lot of traders are more disciplined. When we have a losing day, we don't get carried away. We don't revenge trade. We don't want to win it all, get it all back in the next 15 minutes. We understand that it's a losing day. It happens. Like football teams last night, the Vikings, they were a losing team. They got to now regroup in the offseason and come back next year. Same with traders. If you have a losing day, walk away, come back the next day, analyze the markets, come back with a clear head, and then you might see it might be easier to recoup your losses when you're more focused and you're more calm, as opposed to just revenge trading. And you guys know what will happen when we do that. Okay, guys? I provided the chart for you guys in Zoom. Enjoy the rest of your day, guys. Have a fantastic day. Remember, there is some 8:30 red market news, PPI news today in the US. I appreciate you guys. Comfort losing, which broker can you use stock trading as a Nigerian? I'm not too familiar with what the brokers down there, but there is some universal brokers. Check out Interactive Brokers, IB. Check out Robinhood. But IB, I believe Interactive Brokers is worldwide. They're one of the bigger household names. Check them out. There's Questrade, Wealthsimple, Robinhood. I'm not sure if they get into the African countries, but I know Interactive Brokers is worldwide. So maybe give them, check them out. Okay, guys? Enjoy the rest of your day, everyone. I appreciate you guys. Have a great day. God bless, guys. Thank you. If you guys can hit the like button, we do appreciate it on YouTube. Thank you, guys. Enjoy your day, everyone.
Recording stopped.
Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.